Hello everyone and welcome to Finacle Shah classes. My name is Shailesh and in today's video of financial statement analysis series, we are going to talk about understanding how to calculate revenue growth rates of businesses which engage into long-term contracts with their customers. Now, for people, before we move forward in this video, I highly recommend you take a look at our third video of financial statement analysis series, which is decoding revenue recognition policies. You will be needing the bit of a background which is discussed in that third video to move forward and grasp content of this video in a much better fashion. So now let's move forward. So typically, एक business का revenue growth rate आप कैसे calculate करते हो? By taking a look at year-on-year growth rates or CAGR, right? या फिर even at times quarter-on-quarter growth rates भी आप check करना चाहते हो तो आप check कर सकते हो. But this approach may not be right for all companies, especially for businesses which engage into long-term contracts with their customers. And as always, we have taken a case study at point in this video as well in today's session, which is just dial. So let me share the whiteboard and discuss how to go about analyzing this. All right, so let's say if a customer walks up to Just Dial and asks for a 5-year advertising contract, as you may already be aware, Just Dial engages into web-based services, mobile application services, advertising services. And let's say that client buys a 5-year contract by paying 5 lakh rupees as the entire amount for that contract. And for simplicity case, I'm just assuming that Just Dial has one client here, so that you understand the bigger, the context which we are trying to deliver through this lecture. So let's just assume that Just Dial has just launched its business. They have no client. And as of 31st March 2022, as the fiscal year was just about to close, they made a sale for 5 lakh rupees at the end of the day, which is basically a 5-year contract. Now, as you may already be aware, in terms of long-term contracts which last more than 1 year of one operating cycle for a business, the revenue recognition is usually done based on percentage completion method or a pro rata method, right? So for fiscal year 2022, the revenue will be 0 because the last day and it was just about to close, so they did not earn anything though they made the sale. And this entire 5 lakh rupees cash which came in will be recorded on the balance sheet as a liability. And under the new accounting standards, that is termed as a contract liability. And under old accounting standards, it used to be called as deferred revenue as well, as you may be aware. So, potato, just एक ही बात है, contract liabilities, deferred revenues. So, balance sheets पे आपको Just Dial के FY22 के अंदर revenue 0 दिखेगा. Again, like I said, I'm assuming a very simple case here that Just Dial has no other clients, no business whatsoever. They just onboarded their first client, which was in the late evening of 31st March 2022, which is why we see a revenue 0. And on the balance sheet side, we'll see that they have a cash of 5 lakh rupees. And on the liability side, asset side, 5 lakh rupees cash, and liability side, either under the ledger contract liabilities or deferred revenue, an amount of 5 lakh rupees. Now, let's talk about, FY23 now. Assuming the sales guys were not able to make a single sale of any contracts in FY23. मतलब एक भी नया client इन्होंने onboard नहीं करा है. ठीक है? Again, like I said, very simple example. So you just assume that. So technically speaking, FY22 के end पे they had only one client, and even FY23 के end पे they had only one client. And the same client basically. No new clients were onboarded. Now what happens? After 1 year service rendering of this 5-year contract, how much revenue will be recognized? The pro rata one, right? So it's a 5-year contract. So of 5 lakh rupees, you would have delivered 1/5 of the value of the contract because it's a 5-year contract. And with 1 year down the line, you will be recognizing 1 lakh rupees as the revenue. So as you can see, you will see the revenue boosting from 0 to 1 lakh rupees in FY23. How? अब मुझे एक चीज बताइए, यहाँ पे genuinely business grow हुआ है क्या? Did they actually grow, or they were only delivering what they were paid for? And it's the accrual accounting which is playing magic with figures here, giving you an illusion that, wow, the company phenomenally is in a growth stage, where in fact they did not onboard a single client because वहीं से तो growth आनी है business. Now you understand why you cannot take year-on-year growth rate or CAGR in such businesses. By comparing year-on-year or CAGR of revenue growth rate, Businesses which engage in long-term contracts often have a huge portion sitting somewhere in the deferred revenues or contract liabilities, which often gets recognized in income statement as revenue delivered. मतलब मैं क्या बोलना चाहता हूँ, समझिए यहाँ पे FY22 के अंदर बैलेंस शीट कुछ ऐसा दिख रहा था, एसेट्स लायबिलिटीज, राइट? सो FY22 के अंदर एसेट साइड में 5 लाख रुपीस कैश आ गया था, रिमेंबर, एंड 5 लाख रुपीस आपका इधर कॉन्ट्रैक्ट लायबिलिटीज या डेफर्ड रेवेन्यू में पड़ा था लायबिलिटीज सेक्शन में, and equity because revenue was zero and assuming no other capital was infused. Abhi, simplicity, these are all changes, okay guys? So don't tell me that how can a business have a zero equity. We are just talking about changes in balance sheets here. So now let's talk about FY23 now. What happens once you have delivered 1 year of the existing obligations which you onboarded? The liability will reduce by 1 lakh rupees because now you have earned 1 lakh rupees out of the 5 lakh advance which was paid to you. आपको जो 5 लाख रुपया मिला था उसमें से 1 लाख रुपए की सर्विसेज आपने दे दी, which means you earned that 1 lakh rupees. So what happens? Your liabilities will go down and your revenue increases, which eventually boosts your equity indirectly. So this is how, what happens. So the magic which is played here when you just simply compare the revenue figures, it's not new growth which has come into business. It's just that the money or the contract which you had received, you are just delivering the part of it. I know I'm taking a very specific, simple example here, but trust me, businesses like Just Dial, they onboard new clients every year. And they in fact let go of old clients every year. होता है ना बहुत बार businesses के अंदर पुराने clients चले भी जाते हैं, नए clients आते भी है. Blindly comparing revenue figures in such a big gamut of things, and yes, let's not forget there are various kinds of products which have different tenures, different values, and this is just a simple business. What if I talk about a business like Mahindra Holidays, यार जिसका 25 साल का holiday package बेचते हैं वो लोग. ऐसे केस में imagine the amount of money which sits in contract liabilities or deferred revenue. If you don't believe me, go and check just the liability section of Mahindra Holidays. You will realize, in fact, in one of the sessions where we talked about, impact of revenue recognition policy changes, we discussed this Mahindra Holidays case study. So hopefully you recall from that video. So the point which we are trying to make here is, which is why for businesses like long-term contracts, a plain comparison of revenue figures from income statement and judging the revenue growth rate and taking it as a proxy for the business growth rate is completely wrong. Now you may be thinking, fir ab kya le, right? I think you very well may already have a hint in your head now. The simple way of understanding the growth rate of a business is going to be the contract values which the businesses have incrementally onboarded in that year. मतलब ऐसा और कितने additional contracts dollar values में business ने कितने additional contracts onboard करे हैं, and that defines your growth rates. Because trust me, they are simply, holding the pipe, or they're simply, basically holding is the wrong word, but let's say they are simply having onboarding clients with a long-term horizon with you, where they are paying you that much money upfront. So the more contracts or the more clients you have on board, the dollar value is going to be directly your increment in. So which is why taking a look at the contractual values of new contracts or dollar values of new contracts which are getting onboarded for Just Dial is a brilliant way of looking at things. Let me explain by taking a look at figures now. So let's actually open Just Dial annual report. So what I've done for everyone's benefit here is I've already opened Just Dial annual report 2020. Let me directly move to page number 163, where we can see the income statement. As you can see, the revenue for the business. Now for an analyst, jo simply revenue comparison karega, what that guy will be doing is they will be comparing revenues. Like FY20 revenue figures are 95311 and FY19 revenue figures is 89150. Hey, there seems to be growth, right? But that's completely wrong for precisely the reason we discussed earlier. So ideally, if analysts were to compare a revenue growth rate, they would be under an illusion that the business grew by how much? The new value, which is 95311, divided by the old value 89150, which is and then -1, which is approximately equal to 7%. So you will be under an illusion that despite a very difficult last 2 weeks of COVID hitting the March end of this business, the business was able to do phenomenally well. They in fact had a revenue growth rate of 7%. But let's figure out whether it is genuinely a growth rate of 7% or something else, right? So, how do you compute that? I've already discussed the flow, how exactly things work. Like when you have a new client on board, the contractual values which you have basically booked from the client's perspective will be sitting where? In your deferred revenues or contractual liabilities में पड़ा रहेगा आपके liabilities ledger के liabilities के. So the more contractual liabilities are increasing or deferred revenues are increasing, इसका मतलब क्या होता है? आपके लिए नए clients on board आ गए. So the increase in contractual liabilities would increase. You have onboarded new clients, right? But contractual liabilities or deferred revenues will also decrease. Why? Do you remember that, FY22 and FY23, I just, discussed some time back. The contractual liabilities or the deferred revenue decreased in that case from 5 to, in a net impact basis, which was 4, because they worked on the old contracts, and that old contracts value became eventually revenue for that business, right? So there are two things which impact contractual liabilities. Contractual liabilities go up because of new customers or new dollar value contracts onboarded, and contractual liabilities, they go down when delivery happens on these promises made. So that is where your obligations or liabilities, they go down because you have earned that now. So, if you were to think of it, how the relationship would work between revenues and contractual liabilities, just think about this. So opening contractual liabilities in case of FY22 was how much? 5, right? And because 1 year went by, you delivered 1 lakh rupees worth services. So what you did, you recognized it as revenue and you reduced your liabilities, right? So opening minus revenue became your closing. But here we were under the assumption that no clients were onboarded. If you onboard new clients, what happens? Your contractual liabilities increases. So plus new dollar valued of contracts onboarded should be equal to what? Closing contract liabilities. So this is how you typically understand. And how do you determine growth? A big business ka growth kaise determine karoge? Based on this and not this. This is precisely we discussed. So let's talk about this and apply it in case of Just Dial. So when you take a look at the revenue figures, yes, we just calculated the revenue grew by 7%, but did it really? Let's find out. Let's take a look at the contractual liabilities, or on the balance sheet side, we perhaps maybe want to take a look at the liability section. So they would be present somewhere in the it has to be a huge number, which you can see it here. Other current liabilities, which is footnote number 18, which is present on page number 187. For viewers' benefit, let me just quickly slightly zoom so that you are able to read it properly. Now, as you can see, this, the deferred revenue has a non-current portion of 3296 lakhs, matlab 33 crores approximately, or 303 crores ka current portion. So overall advance from customer, or the contract value for closing value of FY20 is 30308 plus 3296. So if you do that, so 30308 plus 3296, that's going to be what? Closing value of contractual liabilities or deferred revenue, as you may call it. 401 carry 56,33604. That's the total value. Remember, why did I club them together? Because this current portion basically indicates the portion of that contract which is due in this year and will be delivered in this year. And as you can see, this is huge and has always remained huge for the current portion, because Just Dial 1 या 1.5-2 साल का ही contract देता होगा. It's clearly visible, and we can conclude based on that. So let's talk about 2019. How much is, so the closing of 2019 will become opening of 2020. So this is closing contract liabilities of 2020. So the opening will be how much? 37652 plus 28, this one, right? 2892. So this is 441 carry, 51 carry, 01 carry, 40544. So okay, pardon my handwriting. Let me scroll slightly so that you are able to read that. Right. So yeah. So the closing contract liabilities is 40544. Sorry, opening contract liabilities and closing is 33604. So remember how much was our revenue? Let me move back to the page number 163. Our revenue for the year was 95311. So remember that equation we just wrote a while back. I'm just going to write it again here for everyone's benefit. So opening contract liabilities plus new clients onboarded or new dollars onboarded minus revenue for the year should be equal to closing contract liabilities. Remember, हम लोगों का aim क्या है, guys? We need to find out this for every year, and if we do that, उसका growth rate हमें बताएगा कि genuinely business किस rate पे grow कर रहा है. I hope everyone is able to catch up with us so far. So opening contract liabilities is how much? 40544, and revenue is how much? 95311. 95311. By the way, I have taken a look at the footnote as well, so don't worry about it. Everything is revenue from operations. So nothing fishy there. I've already done that homework for you guys. And is equals to 33604 and plus new dollars onboarded or new clients onboarded. So you can calculate this value, back calculate, using a simple algebra here, which is new dollars onboarded. Just going to rub this off because now that we have those values noted down. New dollars onboarded should be equal to what? 33604 plus 95311 and then minus 40544, right? So I'm just going to do the maths here for you guys. 1, 9, 8, 12, and subtracting that. So 1, 2, 8, 9, 1, 5 minus 40544. So this is 1, 7, 3, 2, 8. Hope I'm doing right. 541, 746, 3. Sorry, 808. Yeah, 88371. So that's figure here. So 88371. So that's the number of clients onboarded by Just Dial, or rather not number of clients, but the dollar value, new dollar value of contracts onboarded by Just Dial. And that precisely is offering us कि incrementally कितने ज़्यादा dollar amounts के clients इनके पास आ चुके हैं. All right, so to show this analysis 88371, let me actually quickly open our blog and show you guys how we have presented this analysis in a tabular format where you can see for yourself. Just a second. Yeah, this one. So I think we discussed this. We took a look at contract liabilities as well, and we discussed this equation where contract liabilities, opening, and then revenue. So that's going to be new contract addition. So take a look at this. I think we have thoroughly discussed all of these values here. 88371 is the value of additions during the year. And if you remember, 95311 was the revenue. 40544 was what? Opening contract liabilities or deferred revenue, and closing was 33604, revenue recognized, and this is how we got. So if an analyst were to take a look at the growth rates, here's the funny part. If you were to take a look at the growth rate, you would be thinking that, hey, the revenue actually grew by 7%, right? If you were to take a look at revenue growth rates. But as we did this analysis for 2020, and which by the way, Just Dial is quite an amazing annual report, because you get this data already calculated. I don't want to show you that way because not always हर बार company नहीं देगी आपको ये data. आपको खुद से निकालते आना चाहिए, which is why I wanted to show you that. Let me show you where that data is present. It's present on the revenue footnote, I think. I think it's here. ये दिख रहा है? 88371. We calculated it, and they have done this. They have done the same thing only, like opening plus this is the balance of opening plus additions minus revenue should be equal to the closing values, and we did the other way around, like ये हम लोगों ने back calculate करा था using the closing one. So one and the same thing. So if you take a look at this, here's the funny part. Actual में clients की growth कितनी आई है, या rather dollar value कितना नया onboard हुआ है? 883 crores, right? And what was last year's value? 963 crores. So technically speaking, the business has slowed. But revenue, the accrual accounting is doing that magic. It is in fact showing you that the business has grown. This is precisely the the summary which we wanted to give out in this video. Sorry if my explanations were a little complicated for a fresher to understand, but you can always read this blog to we've tried to pen it down in a very simple fashion here as well. So just summarizing what we have done in this video today. So when you take a look at the revenue growth rates for businesses where long-term contracts are present, the accrual accounting is doing this magic that you will see that it's a 7% growth rate. But actual में हो क्या रहा है यहाँ पे? The growth in revenue is not coming because of new clients onboarded in the current year, but it is coming because of new clients onboarded last year. But last year के clients का इस बार फायदा उठा लोगे आप, but फिर आगे क्या होगा? आगे तो फिर आपका degrowth आना ही है ना? And genuinely वो track करने के लिए इसीलिए ऐसे businesses which have long-term contracts with clients, it makes sense, rather than blindly taking a lagged approach in revenue growth rates, it is always recommended you take a coincidental approach when it comes to revenue growth rate computation. तो मतलब additions during the year slow down हो चुके हैं, which is why you see there's in fact a degrowth when it comes to revenue in FY 2020. This is something which an analyst should take a look at, because this is very alarming. A revenue degrowth basically indicates maybe you're not able to onboard the clients. Now, a business may give out justifications that, hey, COVID hit India pretty bad and everything. But, you really need to take a look at the ground realities. India mein COVID hit hua tha post, I guess, genuinely lockdown started around 22nd March 2020, which would like last 7-8 days of the year. Maybe one needs to take a look at the quarterly financials and see whether genuinely a business like Just Dial books majority of the revenue in the last quarter of the year, or how did Q4 FY20 did in comparison to Q4 FY19, and is it genuinely that impressive that in the last 8 days of the year they book most of their revenues? You need to take a look at that. So this is the perspective which we wanted to give out. Like again, like it's in no way recommendations. These are just a different way of looking at the businesses, how to go about analyzing these businesses. जो शायद एक कैंडिडेट ब्लाइंडली क्वांट्स अप्रोच लगा के शायद रेवेन्यू ग्रोथ रेट का फिल्टर लगा के बिजनेस शॉर्टलिस्ट करके सोच रहा हो, तो मे बी परहैप्स यू मे end up losing a good opportunity just because last year order book, I won't call it order book, it's a different term actually, but last year, let's say the value of onboarded clients were very weak, which is why the revenue in this year is weak. उल्टा सिनारियो भी आपके साथ हो सकता है, but Just Dial के साथ exact opposite हुआ है, because the client's value onboarded in 2019 was humongous, which led to revenue growth rate very high, illusion, which came in at a lagged approach in 2020. But what if your business is, these are Just Dial businesses which engage into 1-year contracts, right? But what if your business is something like Mahindra Holidays, जहाँ पे 25 साल का contract चलता है, which is why it's really important to take a look at, how many additional contracts have been onboarded, what is the dollar value of the same, and how the businesses grow. precisely a good way of looking at things rather than blindly following a revenue CAGR or a year-on-year approach, in our opinion. Please do let us know what you think of this video. Also, in case if you have any questions, feel free to ask us in the comment section of the video. You can also read this article on our blog, which will be posted once this video is posted. So do take a look at this. For our readers, it's a good context which we have tried to put in, and hopefully viewers of this video would have enjoyed the content which we are trying to give out at this approach. For more such content, you can always follow us on YouTube. In fact, we have some amazing content series there. Business analysis, financial analysis is what we are referring to at the moment. We have also learned from Stalwart series, where we have had the privilege of hosting Kenneth Andrade sir, Amit Mantri sir. Some amazing content was discussed by Kenneth Andrade sir. In this video, we highly recommend viewers to take a look at this. We in fact also have valuation series, and we have a current affairs series where we talk about ongoing market events every alternate Sunday. And recently, you can take a look at the videos which were posted there as well. Hopefully you guys like the content of our channels. Do subscribe to our YouTube channel to stay updated with the content. You can always refer to our forum for more of such reading educative content. Thank you so much for watching this video. We look forward to having you in the next session. Thank you.